Good morning, students. Today we are starting new chapter, that is cash flow statement. Cash flow statement, here it is also same like fund flow statement, but in fund flow statement we consider all the current assets and current liabilities. But in cash flow statement, cash. So first, before going that, we will have a introduction. Cash flow statement. There are three words: cash and statement. Cash means the most liquid asset. Anyone anytime will accept it. No one will say no. It is a most liquid asset, cash. So cash is a medium of exchange. It is a money. So here when we talk about cash flow statement, any transaction related to cash only should be considered, not any cash. Like if someone is giving you cash, or if you sell some asset, if you are getting cash, then you should consider it. Then is that only cash or something else? Yes, cash and equivalent to cash. What is equivalent to cash? Bank balance. So the money which is there in your pocket is also a cash. The money which is there in your bank account is also a cash. Say for example, if you want to pay someone 10 lakh rupees, it is not there in your pocket. So what you will do? You will draft a check. So that is also called as cash. Then you can ask me, ma'am, bills payable is a cash. No, bills payable is not equivalent to cash because it will have a due date. So within only after the maturity of the due date only you will get the cash. So bills payable is not a cash. So cash and cash equivalent. You should be very careful with cash equivalent. What are the things comes under cash equivalent is bank balance and marketable securities. Marketable securities are those securities which can be easily converted into cash. Suddenly, if I want cash, I can sell that and I can get the cash. So, marketable security and bank balance is treated as cash. Next, what is flow? What do you mean by flow? Flow means something which is keep on changing, which changes the cash inflow and cash outflow. That is called flow. So the changes in the cash is called flow. Next, what is statement? Statement is a document which shows the changes in cash. It is a statement which shows changes in cash. So now you understood what do you mean by cash? Cash is a money and something equivalent to cash. You should not consider only cash. Cash, bank balance and marketable securities. Next comes flow. Flow is changes in cash. That's what the change. The flow means something which is not stagnant. It is moving. So changes. Next, statement. What is statement? Statement is a document. Statement is a document. So this is very important. So once you learn this, then you should just, everyone knows it. It's very easy to understand, and like it's not difficult because everyone day to day life we are doing it. Today I had 10,000 rupees. I went to shop. I purchased, and I'm left with 8,000. That means how much I've expenditure has happened. How much cash outflow? 2,000 rupees. So those changes only we are maintaining here. What was the opening and what was the closing? Whether it increased or decreased. If it increased, what is the reason? If it decreased, what is the reason? Those things we are doing here. That's all. So cash flow statement basically says the changes in the cash, whether it increase or decrease. If it increased, why it increased, how it increased. If decreased, how it decreased, why it decreased. Those things we are recording. So then it is called cash flow statement. So under cash flow statement, we consider three subheadings. That is operating activity, investment activity and financial activity. So we consider operating activity, investment activity and finance activity. Say for example, how they are linked to each other. In operating, say when you start a business, to start a business what you want? You want capital, you want money, you want capital to start a business. Is that it's only enough to, so when we talk about capital, it will come in your finance, whether you issue shares, whether you issue debenture, whether you take loan. After that, it's only cash or money is enough? No, you need assets, you need machinery, you need building. So those things comes in investment. Next, after that, it starts the like only building machinery and capital is enough to start a business? No. Then you need this operating expenses, that is purchase of goods, conversion of goods into raw material, those expenses, then those sales, those things comes under operating. So here is the cash flow statement which I have prepared. But the cash flow statement starts like this. Cash flow statement from operating activities. And guys, you have to be very careful. Cash flow statement what we are preparing in Bangalore University is indirect method. Most of the business prepare indirect method. No, actually direct method is easy, but people prepare indirect method. And according to your syllabus also, we follow indirect method of cash flow statement. Cash flow statement, first we should write cash, this is inner column and this is cash flow from operating activities. So after tax. But I don't want to start, actually when starting a problem we have to start like this, but I'm not starting like this. We will start the cash flow statement with the other records. Like we will start first with ulta. We will do ulta. First we will do finance activity, then operating activity, then finance activity, investment activity, and then operating activity, only for explanation purpose. Otherwise, when we start with a problem, we will start with operating items only.